I think there's a lot of forces pointing in the way to scale, especially for the passive plays, right? So, which you see that the bigger are winning, both in pure passive, but also in smart beta products. So the likes of BlackRock's, Vanguard's, et cetera. Having said that, there is obviously a limit to the growth of passives, and I think the whole discussion about technology shares in US is more or less centered around that as well, right? Of course, there are elements of a bubble, but the bubble are predominantly also maybe created by these index investments, so which becomes self-reinforcing. So discussion is obviously to what degree can you keep on growing passive? Is it 50, 60, 70%? We are probably close to that point, right? Which leaves room for alpha players. On that side, the alpha players is also facing challenges, right? The challenge is obviously that distribution gets more and more concentrated, so you need new distribution strategies in order to be relevant. There is a trend towards you can not only be good in one alpha product, you probably need a little bit more broad solution-based propositions. So there are forces against the mid players as well. But to answer your questions on a high level, I would say there are room for both. There are different forces pushing in different directions, but there are definitely room for growth, but very much depending on which strategy you're playing.